Hi, and welcome again to another edition of Market Analysis for today, July 10th of 2025. I'm Gio Benacourt, and this is a recording done by Vantage Markets right about 40 minutes prior to the U.S. session open. Well, let's get right to it. NVIDIA tops 4 trillion, Bitcoin hits high above 112,000, and NASDAQ climbs to another record high. Now, that all sounds great, but it leaves a lot of for Federal Reserve Powell to ponder on. Powell has one of the easiest jobs in Washington, according to President Trump, but the latest stocks rally Wednesday highlights a key dilemma. The market and the economy going to stay strong, or will Trump's tariffs derail them? The answer will go a long way to determining if and when interest rates go lower, something Trump has made very clear he would like to see. Minutes from last month's meeting released yesterday show a divide emerging among policymakers, with some ready to start cutting sooner rather than later. For his part, Powell says there is still a risk that tariffs drive up inflation, which is the main reason for the wait-and-see approach, even as the labor market shows signs of weakening, which the jobless claims came in today lower than expected. It was expected 235,000 new claims, but 227,000 came in, 8,000 lower. So that's a positive sign. But there is also a chance that tariffs slam the brakes on growth. The new 50% levy on copper, which is crucial for everything from electronics to home building, looks particularly risky in that regard. If that is what's happening, then waiting for more evidence could put the Fed behind the curve, and it would add weight to Trump's accusations that Powell is always too late to act. The upcoming earnings season could provide more clues. It's not just the Fed and Powell facing tough choices, it's investors too. The stock market is powering ahead as if tariffs aren't a threat to the economy. The bond market is holding up as if tariffs won't be inflationary and Fed cuts are coming. Now, it's hard to see how they can both be right, and the worst case scenario is stagflation, when growth tanks and inflation takes off. Everyone loses if that comes to pass. It will make NVIDIA and the market's recent milestone look like hollow victories, and Powell's job harder still. So with that being said, let's take a look at what we can come in and speculate in today's market trends. All right, so tendency or direction. We've seen how how the markets yesterday made that all-time high. So as I'm placing that as a first level of resistance. So let's use our tool, trend-based extension, to measure this movement. So from this lower, the previous lower from yesterday's movement to yesterday's high, to what market has made a low today so far, we can come in and then speculate that if the golden ratio, which is a natural phenomenon, is not a man-made scenario, which is everything comes to it, then that we could select that as our possible level of second possible level of resistance, because initially we obviously want to be able to see that the market will come and revisit yesterday's high and will continue to move higher. We are obviously in the scenario where we are obviously in the earnings season, so there's a lot of companies to be out to report. So let's see. Now, in regards to support, well, yesterday swing low, so we find a range. That's our range. Then from here we can come in and speculate and look at a level where we can, looking back, we can come in and cross as many candles as possible. So we can choose that. I mean, I could even be lower, but you could use a psychological value, 22,900. I like to choose, I'm going to choose, personal choose 22,950. So that's what we've seen our levels. Now let's take a look at the S&P. So the S&P as well, moving higher. It didn't quite make that all-time high, so we're gonna choose that all-time high traded last week at 63.32, and then our first level of resistance 62.20, which is almost, look, these two levels right here. Support, yesterday's swing low, and 62.80. So the market has retraced. It's in recovery mode. It's getting ready for another leg up. We'll see. Initially buying, continue to go with the momentum. Maybe the profit taken and the Nasdaq will be taken in place. But you also want to keep an eye on crude oil. We'll look at it in a minute. So in regards to the Dow, 45,000 psychological value jumps at me, and I'm gonna use yesterday's swing high again. Yesterday's swing low, because that's our range. And as far as our first level of support, I'm gonna choose around yesterday's open, which is 44,500-ish. Then crude oil. All right, so crude oil, with demand and whatnot, and OPEC Plus are gonna start incrementing their quota by 500,000 barrels, but beginning September. So we still have all of August, all of July, and all of August for this price to come in. But now, can we come in and speculate that since we have made this 2 weeks closing around the same level, in a way, a double top, and 69 being right above it, have we created a top in crude oil? And we're seeing that could be the case. So I'm going to leave 69 as my second level of resistance, and then just a double top. Initially, we have the 20-day moving average as a level of possible level of support or resistance. Sorry, this dynamic level, $67, and let's just use that second one that we had from yesterday. So another leg down, a continuation to a leg down. I mean, this big parabolic movement is still intact. We need to retrace all of that. Nat Gas has been, yesterday made a strong move to the downside. Today seems to be looking for a recovery, but obviously we need to update our levels of support. So G110, and then yesterday swing low. I'm gonna use yesterday's open for a swing high, and then 330 for support and resistance. I'm sorry. So let's see if that will be our levels to be met. Then we have gold. So gold is finally rallying. It was able to close above 3,300 yesterday, because it was trying to be low. It did obviously open right above the 50-day moving average, which it was penetrated. But so this is a momentum to the upside and on gold. So it's 33.40, and then I'm gonna use this double top right here, the second level of resistance. Support, hey, that 50-day moving average is showing nice level of support, and then obviously that swing low from yesterday. So rally to the upside, looking to buy gold. Then we have here silver. Basically, yesterday's levels are unmet, so I'm gonna keep them. It is looking for a recovery of yesterday's full fluctuation. So it has done that already, because it did rejected a level of resistance. So let's see if this is just profit taken and continue to move higher. And then copper. So like I said, copper is used in everything. So the copper is beginning to walk the upper Bollinger Band. So that is a very strong signal to the upside. Even though we are in the overbought territory, doesn't mean that it won't stop moving higher. So again, speculating that we'll revisit that swing high created on Tuesday. Bitcoin, it shot up through our levels of resistance. So it hit 112. So therefore 112 and change, 113, 110,000 psychological. I'm going to leave that pretty tight range for Bitcoin. And then I'm gonna use this triple top here as a second level of support. It could be profit taking in it, but let's see. The euro 117 continues to be that milestone or the level that the market keeps on rejecting. It has reached it once, twice, three times, and I see it rejecting because it did penetrate it, but it didn't close below it. So, and right now the market basically rebound off of it. So I'm gonna leave the same level. So I'm actually gonna bring down to the 20-day moving average just to use it as what is used for, dynamic level of support. So let's see if the market will. It did rally to the upside, obviously, because the wick made it as high as 117.36. So let's see if it's just profit taken, and then a recovery will be done. The pound also has created a double top here, so I'm gonna use that as our first level of resistance again, because it needs to obviously climb back up and cross the 20-day moving average. Right now, it's penetrating our first level of support, so 135,400, and I'm gonna leave that there. Indeed, I mean, you could come in and test out if this is gonna continue to move lower or will it recover. And the dollar index. So the dollar index, okay, dollar index open up, gap down, and it's pushing higher. So I'm gonna leave those levels of resistance there. We have the 20-day moving average right now acting as a level of dynamic resistance. So let's use a previous swing low from Tuesday, and then this doji, around this doji right here as our second level. All right, so if it does continue to move higher, it'll continue to put pressure on the currencies and the metals. But if the 20-day moving average rejects this rally to the upside, or if it already has and it's already retracing, we'll continue to see movement towards the opening of where the candle has today. Then we'll see a continuation of a rally on the upside. That's it for today. Have a great trade today. See you tomorrow.